Market volatility and the road ahead for beef prices, a comprehensive analysis. The beef industry is experiencing a roller coaster ride, with federally inspected cattle harvest head counts swinging wildly over the past 3 weeks. It all started with a 14,000 head decline 2 weeks ago due to scheduled upgrades at a fed cattle plant. However, last week's recovery pulled the week's total 9,000 head larger than the 6-week average, offering a glimmer of hope. The market took an unexpected turn when President Trump hinted at potential action to lower beef prices through purchases from Argentina. This abruptly ended a 9-day surge in nearby live cattle contracts, which rose by over $13 per CWT, without a correction. As a result, Friday's feeder cattle futures were limit down, and live cattle futures traded sharply lower. Despite the initial shock, the market demonstrated resilience early this week. Futures prices have shrugged off the president's comments, regaining much of the price slippage incurred on Friday. For instance, the April 2026 live cattle contract touched a high-water mark of $250 per CWT last Thursday before settling $7.28 per CWT, lower by Friday's close. By Tuesday morning, a $3.05 per CWT recovery pulled the April contract up to $246 per CWT. Cash-fed cattle prices last week defied the futures setback, averaging $239.79 per CWT, a $6.84 per CWT increase on the prior week. Seasonal increases in wholesale cutout values are expected to continue at least through the end of October, supported by strong packer demand to capture a large head count last week. However, the typical October beef market is marked by a strong swing in carcass cutout values as demand lulls after Labor Day, sending cutout values to a seasonal low beginning in October. The turnaround happened swiftly, with cutout values in early October 2% below the year's annual average. By month's end, prices averaged 1% above the annual average in the last 3 years. For this pattern to repeat in 2025, the comprehensive cutout would need to gain $10 per CWT in the next 10 days, which is a significant challenge. The 2025 wholesale carcass prices have varied widely within a range of $87 per CWT, compared to a tighter average trading range of just $25 per CWT in the prior 3 years. This year's comprehensive cutout values are averaging 16% higher than last year, making a 3% shift mean a larger dollar value move than last year. The disconnect between cutout values and fed cattle values is significant. Packers have been running deep in the red for many months this year, but narrower margin losses encourage larger harvest levels. A closer look at individual beef cuts and seasonal price trends for the fourth quarter reveals that ribeyes and tenderloins are in high demand for the holidays, with prices already 20 to 30% higher than a year ago, and new record high prices expected for early December. Strip loins, a cheaper steak and roast substitute for the holidays, have gained popularity, keeping strip loin prices high this season. Shoulder clods and briskets, supported by smaller head counts and processor demand, are also seeing impressive price points. A final optimistic note is the widening of the USDA prime cutout price spread above USDA choice, with the latest spread at $57 per CWT, bolstering average prime grid premiums to $22.42 per CWT, earlier this month. Nebraska leads the way among the largest packing states, with feeders delivering 14.6% prime carcasses to packers, a significant increase from the 10% level seen last year. Kansas and Texas are also showing impressive grade trends, with Kansas at 9.7% and Texas closing the gap at 8% prime.